Welcome back. The markets are trading flat, trying to find some direction. It's a morning of consolidation, and that's probably the best way to describe it. Bank Nifty, though, trading slightly weaker, and the broader market seeing a little bit of outperformance for now, at least. There's some report that ICRA has put out, which they state that asset quality issue has peaked, and 18 PSU banks may remain in red. Anil Gupta, Vice President, Financial Sector Ratings of ICRA, now joins in to talk to us about the report. Morning, Anil. Thanks for joining in. Anil, you are of the opinion that the worst for asset quality is finally behind us. Could you elaborate on that research report you put out?
Yeah, good morning. If you look at the slippages during the Q1, so Q1 slippages on a annualized basis were close to around 4.7%, though it is still higher in relation to a normalized rate, which we will look at around 3%. But if we look at the SMA data, second is we look at the standard restructured advances, which are around 0.55% of the advances. The overall stress has been recognized. Further, like for the first time in last 18 quarters, we have seen the absolute stock of the GNPAs as well as the GNPA percentage declining for the first time in the last 18 quarters. So overall, we believe fresh slippages have picked out, and we should see a continuous declining trend in terms of fresh slippages. And overall, we believe the slippages should annualize at around 3% for financial year 19.
All right. Just a word before I talk about recoveries and really the NCLT recovery process in general and what it means for banks. If you're tracking on the power side of it, I mean, there's been so much news that's happened off late, including the Allahabad High Court order and how there's no relief, interim relief as such. From the banking side of things, what's the view? Because most of these accounts have already been provisioned for. They are rushing to resolve them before they're sent out to the NCLT. But as a whole, what's the view on power NPAs in particular and the financial health of banks with regard to that sector?
Yeah, see, if you look at the power sector NPAs, most of these accounts were under the standstill clause under SDR. So though these accounts should have been recognized as NPA much earlier, but most of these accounts have been recognized as NPAs during the last 2 quarters of financial year 18 only. So when the standstill clause expired, you had to provide for these NPAs from the retrospective effect. So at best, we can expect that these NPAs will not be more than 2 years old in the banking system. The 2 years old NPA typically require a standard aging provisions of around 25%. In best case, the provision should not be more than 25 to 30% in our estimate. Whereas the recoveries which we are expecting cannot be like more than 40% or 50% in a best case scenario. Higher haircuts can be higher than this. So what we believe is whenever the resolution is to happen, we should see banks taking haircuts more than the provisions which they are carrying. So it should impact their provisioning requirements.
Anil, I mean, what and how much do you think banks will be able to recover from cases under NCLT? And also, do you think the ICA will really be beneficial to these banks? Will they really deliver to the promise that they are making?
See, more important than haircuts, what we should think is IBC is at least taking the things forward in terms of resolution. So if, let's say, for example, if you have seen Bhushan Steel account, if the resolution would not have happened, we would have, banking system would have required to make 100% provision on that account this year. So even if you are going ahead with a 50% sort of a haircut and at least saving balance 50% provisions, to that extent IBC is actually helpful. But if we have to say the provisioning or the haircuts or the ultimate recovery, which we are looking at in the NCLT accounts, it's actually going to be much lower. Like we don't expect that the overall recovery should exceed 30 to 35%. And we have seen some steel accounts and maybe few more, 1 or 2 like SR Steel or Bhushan Power will give you a good recovery. But subsequent to that, we don't think there will be much of the accounts. So one more is that Binani Cement, which is going to give you good recovery. But more than that, I think EPC contractors or maybe these power projects are not going to give you a good recovery beyond 30%, 35% in case of maybe power sector cases, and EPC companies barely 10 to 15% recovery should come.
sense, in particular on inter-creditor agreement? I mean, can this be another weapon in the fight against NPAs? How do you view the ICA process in general, and will banks really be able to make significant recoveries or gains out of this process?
See, ICA, yes, it is a helpful, but that is when your resolution is in early stages, or when your NPA are in early stages. When you have already provided, let's say, in NCLT 1 and 2, when you have already provided almost 70-75% on these accounts, then typically there is nothing to save on the account. So recovery, anyways, you are expecting only 30-35%. So ICA typically will be helpful in future cases to resolve the accounts at early stages of stress. So when the account is typically showing signs of pressure, you can typically do a much early action. As of now, when you have already provided almost 70% in NCLT 1 and 2, and these assets are like really days, except for steel accounts, we don't see any much recovery happening in these accounts. ICA will not be helpful in these accounts, but going forward it should be, yes.
Anil, what about the growth outlook for PSU banks? Are you working with expecting pickup in lending, PSU participation likely going ahead, do you think, in the next couple of quarters?
So, if you look at the capital position, what we have been saying for last few quarters after the PNB fraud hit the banking public sector bank space, that the public sector banks have not been able to raise the capital from the market as was envisaged in the bank recapitalization plan. So the capital which is now available with public sector banks is whatever is going to be recapitalization coming from the Government of India. Now that capital we don't think is going to be even sufficient to take care of the provisioning requirement, leave aside the growth requirement. So if you look at the Q1 results, we had almost 9 out of 21 public sector banks which were precariously closer to around 7% on the tier 1, and these banks were not meeting capital conservation buffers. Now, when you don't meet capital conservation buffer, that is actually a PCA criteria for the banks. Now, when banks are not meeting the basic capital ratio, the question of a growth in terms of advances or risk-weighted assets is ruled out. We are not looking at a more than 1 to 1.5% growth for the overall public sector bank advances. That will be already led by a top 3 or 4 public sector banks.
All right. Thanks so much, then, Anil, for running us through your reading of banks, how the NPA cycle is peaking out, what happens to credit pickup. ICA can be an additional helpful tool, but will not change significantly as to how things are on the ground as yet, at least. And of course, those power NPAs are a big concern. Banks have provision for most of it, but it can still affect their provisioning going forward. From here, we brought you exclusive details this morning as well, how bankers are rushing to resolve some of these cases before they have to be headed off to the NCLT. The 180-day deadline ended a couple of days back. Now banks have about 15 days, so 13 more days essentially before they need to refer these accounts to the NCLT. So there are concerns over there on the power sector, but of course banks are looking to get out of it as best as they can. But you can definitely expect a third wave of NCLT lists coming out soon. Meanwhile,